So are these markets in trouble? Well, in today's video, we're going to be going over the levels that need to hold for the bulls to regain some control in this markets and what levels that if are broken are going to cause some monster selling for the next few weeks. What's going on, everybody? My name is Tony. I make a video every single week to walk you through the levels that you need to pay attention to so that you can be better prepared for the moves happening in the markets. You can see what they're trying to do. You can understand where the strength's at and hopefully make a little bit more consistent income in your trading. So let's dive right into the SPY. So currently right now, SPY is gapping down pretty strongly into a very, very strong support. Now we've been waiting for 550 to happen here for quite a while at RLT. What happens at this level is going to be crucial. Are the bulls going to hold these levels? Do we start seeing lower wicks on a daily chart? Because this is most likely going to take a couple days for us to see just how strong these bears really are. If the bears are strong, we are going to have a strong closure for multiple days below 550. If that starts to happen, the door is open for 530 to 525 for probably this week. Things are going to start getting a little bit crazy. The bottom is going to start to fall out very, very fast. Bulls had their chance last week here to really make a move, and they failed miserably, closing at its lows pretty much on Friday. Not looking great. So this is the last little stand for the bulls. If they do not hold this level, we will continue to get bounces, but they will continue to get wrecked and to get pushed down even lower. So 550 is so important for SPY. Give it a few days. Even if we do close below it, if we go closing right back up above it the next day, that's more of a trap, and that can lead to a little bit more of a double bottom. That would be the best case scenario for the bulls at this point, is that they hold this level at 550 on SPY. We get a double bottom, and then we start getting some daily closures up above 575. That's what has to happen. Everything else is bearish. Okay, so I would expect the bears to step back in if we were to get a push. Back in probably around like 555 would be a good starting point. Would be the first place where I would expect the bears to jump in and us to start putting in some upper wicks here on a daily chart on SPY. And I mentioned the daily chart because if you understand what the daily chart's doing, you can day trade with that information. You can swing trade with that information. Look at the daily chart. That's going to give you a really good idea of who's got the momentum, where is it trying to get to, and what levels do you need to watch. So again, that 555 is going to be the first real big level, and then back into some daily EMAs, so 560 to 565. All of this is a huge bear zone. Any bull move in this area, expect the bears to come back in and push it back lower. That is until we get daily closures up above 575. All right. Now, if the bulls do hold this double bottom, yes, it is stronger, and I expect some bull moves, but just know it's not out of the woods yet if they hold this 550 level, okay? We're going to need to see bulls close and regain lower highs so that they can open the door for higher lows to start to come back in. So that's your bull scenario. The bear scenario is things could start getting pretty ugly pretty fast, and it already has, and it already is. The bulls have had their chance to hold. They failed miserably. Now we see what happens. We are gapping down huge, and if we look over here at an hourly time frame, we are already way oversold. Lots of bear candles moving through, a little bit of hesitation, and now followed by a huge gap down right at a support. That tells me the market's going to have a harder time going lower. Maybe, again, like I said, a little bit of a bounce first, a little bit of a resting pattern, possibly a strong close down today, but then tomorrow and Wednesday, a little bit of a resting pattern. Something like that's going to have to happen unless these bears go full crash mode. That's where if we start putting in multiple bear days in a row down here and it starts moving into that 535 level very quickly. Now we know things could be on the verge of COVID type crashes, right? Where levels, it doesn't matter how strong things are, it's just blowing through all of it. What's going to really give us an edge this week would be our option levels. 545 is absolutely loaded with puts for this Friday. So that tells me that we're probably going to interact with 545, but I don't think we'll get much lower than 545 this week. So we want to keep an eye out for that. If 545 level breaks, or we gap across it, 540 and 535, they have a decent amount, but it's nothing compared to 545. This is going to be our line in the sand if 550 breaks. So just because 550 breaks down, again, It could crash, but expect 545 to hold it up. We do have some news coming out on tariffs and a lot of stuff this week. The markets are super extended to the downside. Tariff news could come out and not be as bad, and the bulls could step back in and rampage this thing higher. Anything can happen, but pay attention to these levels. At the moment, the bears are definitely in control, and 545 and 550, those are the two big areas that we can start to see just how strong the bulls are trying to be or how strong the bears are. So keep an eye out for that. If we start to break down, I think the low of the week is going to be around 535 probably. That's your expected weekly move for this week right now based on the options. 535, maybe even down to 525. Somewhere in this box should be a very nice bull area, and that should lead to some buying. So if we get down there, could that be the low? Sure. But what I would expect is another bounce back up and then possibly another rotation lower, at least another rotation down to test some bouncing levels to see if we double bottom. So this is kind of what I expect to see over the next couple weeks in price action wise if the bears step back in. If the bulls come back in, the picture is going to look a lot like this. It might take these lows. It's going to bounce back up. We're going to need to see some strong buying, closures up above 575, retests, and taken off. There's your bear scenario. There's your bull scenario. Again, the markets can do whatever they want to do. It's our job to be prepared for either scenario. Then we're not sitting here hoping that one thing happens and then just ignoring all the signs when it's not happening. We want to be able to see the markets objectively. We want to be able to see them for what they are and what they're doing and have a game plan to go, look, bulls could step in here. Bears are in control right now, so I'm leaning more bearish, but the bears would have to do this, 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 and this in order to maintain their strength to the downside. You're always looking at it objectively. You're never like, I am correct. It's for sure doing this. Well, I look at it as probabilities. There's a higher probability that we're heading down to 535 than we're heading up to 575 on SPY. But I am open to see either scenario, and that'll help you a ton in your trading. Let's dive on in to the Qs. But before we jump into the Qs here, I wanted to let you know that we have tons of free online trading courses over at reallifetrading.com. Come check us out. Come trade live with us. You can start a 7-day free trial with us to trade every single day. I do these market recaps every single day in the communities to walk you through how to navigate the markets on a daily basis, on a swing trading basis, day trading, options, all of that fun stuff. Come check us out over at reallifetrading.com. All right, for the Qs, we've got some seriously strong bear levels. So we're already gapping the key level here at 466 on the Qs, which is very strong for the bears, but we're working on 3 bear days, possibly 4 bear days in a row. So at some point, the bulls are either going to cause some resting to come back in, or we're going to get a little bit of a bounce back up. I would expect 466 to be a very strong resistance and for the markets to really struggle to get back up above that level. So look for bears to come back in. Look for upper wicks in this bear area inside this box. So again, even if they make it above 466, until we start breaking some lower highs, in my opinion, around 492, the bears are in control. So bulls can come in very strong and still give it back up. So don't fall victim to trying to chase these things. Let the markets tell you who's in control. Right now, it's the bears. This is an extremely strong gap, way stronger than the gap is on SPY. So 466 should hold. So right now, 452 all the way down to 444 is a strong bull level. I like this support a lot. I think it'll hold for this week. We will see, but I think it's also very possible that this can get a very quick move down there this week. Qs are looking a lot more bearish than SPY is, and that could be dragging SPY down along with it. Again, looking for daily closures. We want to see daily closures come back in, strong moves down with a gap. I wouldn't be shocked at all if we get a little bit of hesitation going into tariff news and a few other things this week. So today might be a little bit of a resting chopping day for Monday here, and we're going to see if the bears want to follow through or if the bulls can start reclaiming ground and beating their way through all this resistance, because it's going to be very choppy through here if that's going to be the case. So if we do make it down to 444, 440 area very quickly on the Qs, I could see us trying to have a pretty strong bull bounce. But then again, the bulls are still going to get stuck back into their resistances. So just because we get that bounce here, it's not out of the woods yet, and it could very much be a lower high situation that rotates back over. Bears are strong, bears are in control. Understand the difference between buying the dips and when the sentiment has shifted, when you want to start selling the rips. This is all through price action, and this is what you can learn through some courses here at Real Life Trading. You join our lifetime membership. It's $97 one time for your entire life, and you get access to our technical analysis courses, the foundation of those things. And then from there, you can jump into our all access pass, where that's where we're doing all of our live trading every single day. That's where you can watch my screen and other moderator screens as well as they trade live. We can answer your questions live. We do a whole bunch of mentor groups each week to teach you how to trade successfully. All of these things should be an investment, right? You should be making way more money than any of this is costing you. So once you're part of the all access pass, that's where you're getting in-depth technical analysis and understanding how to do these levels, understanding how to read these markets, because price action is the key. That's how you're going to succeed in these markets, because without price action, you're always late. And if you're late, trading is extremely hard. You want to be early. You want to have a game plan of what it's going to do when it gets to these levels and how you're going to play it. And first off, know why these levels are important. What is it about this level? Why? Why do I care about it? What do I want to see what happens here? Why is a bull move here stronger than a bull move here? All right. How could this possibly carry more bull momentum if we got down to here compared to here? All of these things are answered through understanding price action. Let's take a look over at Carvana. So this was a requested ticker here in the comments, so please feel free to leave a comment, and the one that gets the most likes, I will add to the list to go over for the review for the following video. But Carvana was the winner here in the comment section here. So again, drop tickers down below. And let's take a look. So Carvana has broken an up channel very strongly, and it's putting in quite a bit of lower wicks here on a daily chart, but we are gapping below that. So the bulls could still try to hold this, but in my opinion, the momentum has shifted to the bear side. So again, bounces should be met with more bear demand, and it would need to be that way until we can start getting some closures back up above 230 or so. That would be what the bulls would need to do for me to start thinking, okay, I trust these dips to get bought back up. So bulls need to get a move here and then that. Right now, the bears are here, but we're at a pretty good support. So let's see if the support holds. If at any point we start closing below our 200 EMA, this red line right here on a weekly chart, then this is possibly going to start to rotate back down. And that leads me to think that we've got a lot more selling to go. 160 would be the next stop on this thing, but it does not look as strong as we'd want. The bull structure is starting to break. The bulls need to reclaim ground very, very quickly. So again, if we start to take out 180, expect 160 to come in very, very quickly. If we just chop through here, there's still that chance that the bulls can reclaim some ground. Dips will get bought back up, and we can continue higher. I hope you guys enjoyed this video. I will see you for next week. Use these levels to help you figure out who is strong, who is not, so you can apply your own strategy, your own approach to the markets. Price action is not about this one strategy or something. Price action is telling you where it's going to go and who has the strength. When you understand that question, you can take any strategy that you want and make money. So if the bulls are holding this level on Carvana, great. Take your great bull strategy and make some money on it. If the bears take back over, great. What's your bear strategy on this? And make money down to this next level and watch this next spot. Okay. It's also going to help you to know when to get out. So price action is so crucial because so many people have their targets down for a 100 and when they short, and I'm saying no, 160 is where you need to go in and then get out at 160 because I don't know what's going to happen here. This is where your bull should step back in. And so many people have these big expectations and they're profitable and then they give it all right back up because they simply don't understand how to read these charts. Come check us out over at Real Life Trading. Let me show you how to trade so that you can make money. Love y'all. I'll see you next week.